By utilizing the strength of expanding businesses, stock investing is a fantastic strategy to increase wealth. Despite the potential long-term rewards, getting started in the stock market can be intimidating for many newcomers. However, you can start buying stock in just a few short minutes. Welcome to the Money Bender. Subscribe and follow for more. In what manner then do you invest in stocks? You can accomplish it in a few different ways, and it is actually fairly easy. To purchase stocks or stock funds, one of the simplest methods is to open an online brokerage account. If you're not comfortable doing that, you can manage your portfolio with the help of a specialist, frequently for a fair price. You can invest in stocks online in any case and start out with minimal capital. These days, more and more people are considering stock investments. They can be a means to increase your investment returns and earn a possible profit, whether they come from something you read or something a buddy mentioned. Everyone wants to purchase stocks at a discount and sell them at a profit, but there are many things to think about before moving forward, such as your objectives, your risk tolerance, and how market volatility may affect your results. Fortunately, purchasing your first shares of stock online is a quick and simple process. Here is a step-by-step manual to help you get started in stock investing. Establish a brokerage account. To purchase stock, you must first have a brokerage account. When choosing an online stock brokerage, keep these two things in mind. Does the brokerage company provide all the goods and services you require? Excellent teaching materials are published by several brokerages for beginning investors. Others offer access to analytical and stock research tools. Some online brokerages have physical location where you can get assistance. You might place more value on other characteristics like the capacity to trade foreign equities or purchase fractional shares. Some brokerages don't provide these. The brokerage platform's user-friendliness. Is it simple to use the platform of the brokerage? The brokerage's mobile interface must be well designed if you want to trade utilizing a mobile device. Try out a few different trading platforms to determine which one you prefer by using Play Money at many of the biggest brokerages before you invest. The majority of significant online brokerages, including TD Ameritrade, Nasdaq, Charles Schwab SCHW-1.26%, and others, have abolished trading commissions, which largely removes cost from consideration when selecting a brokerage platform. You must finish a fresh account application after selecting a brokerage. This is usually quick and simple, but you'll need to be prepared with photo identification, like a driver's license and your social security number. If you wish to use your checking or savings account to finance your new brokerage account, you'll also need your bank account details. You have the option of opening a regular brokerage account or an individual retirement account IRA, which offers some good tax benefits. You may also need to decide whether to provide your new brokerage account margin privileges. You can purchase stocks using money borrowed from your brokerage if you have margin privilege. Establishing a margin privilege can have certain advantages despite the fact that investing on margin is generally not a good idea. For instance, if you have the option to trade on leverage, you can open a brokerage account before the deposited funds have cleared. Choose the stocks you want to purchase. The next stage is to choose the stocks you want to buy. Therefore, I won't go into too much detail on the numerous approaches to stock analysis and selection here. Here are some guidelines. Adopt a buy and hold strategy by only investing in stocks that you intend to keep for a long time. Don't invest in a stock just because you believe it will do well in the coming days, weeks, or months. Don't invest all of your money in just one or two stocks. Instead, diversify your holdings. Buy a few shares of several different stocks to diversify your portfolio, even if your initial investment is simply a little sum. Owning the stocks of multiple companies doesn't cost any more now that commission-free trading is available. Choose how many shares to purchase. Decide how much money you want to invest in each stock that interests you. Then divide that amount by the stock's current share price to find out how many shares you should purchase. On the portal of your brokerage, you may search for stock prices using either the ticker symbol for the stock or the name of the firm. You can buy any dollar quantity of a stock, regardless of the share price, if your brokerage trades fractional shares. The number of shares you can buy would need to be rounded down to the nearest whole number of shares, since many brokerages don't buy or sell fractional shares. Let's use the case of investing $1,000 in Microsoft MSFD minus 1.4% as an illustration. You look up the share price of Microsoft and discover that it is $149.50. By dividing $1,000 by this share price, you can purchase a maximum of 6.7 shares. You would buy 6 shares of Microsoft stock, assuming your brokerage doesn't deal in fractional shares. Choose an order type. There are various order types for stock purchases. The kind of stock purchase order you submit outlines the circumstances under which you want your broker to act on your behalf. The ideal order type for buy and hold investors is usually a market order, which tells your broker to purchase the stock right away and at the best price. However, you might want to submit a limit order, which tells your broker the highest price you're willing to pay for a stock. You might issue a limit order. For instance, if a stock is now trading for $20.50 a share and you wish to buy it only when the price drops below $20. The only time your broker would act on your behalf is if the stock price fell below $20. Send your brokerage a stock order. To place a stock order, navigate to the relevant area of your brokerage's platform and fill out the necessary fields. The firm name or stock ticker, whether you wish to purchase or sell shares, and the dollar amount or number of shares you desire are normally requested by your brokerage. If the order type is a market order, your stock purchase should be carried out shortly after you hit the Place Order button. As soon as you buy new shares, your portfolio should update to reflect your ownership. Build your portfolio. A strong investing portfolio requires time, perseverance, and discipline to develop. The next step after opening a brokerage account and learning how to purchase and sell stocks is to keep adding funds to your account and make long-term investments in businesses you believe in. When it comes to stock investment, having a long-term perspective is crucial. This entails resisting the need to track stock prices constantly on a daily basis, as these movements are frequent and can be annoying. Instead, concentrate on the core strengths of the businesses you've invested in, such as their sound financial position, expansion prospects, and competitive edge. While it's crucial to keep up with the businesses in which you own shares, avoid reacting hastily to slight price changes. Instead, keep in mind the same time in the market rather than timing the market. Long-term ownership of shares in outstanding corporations will put you in a position to gain from the growth and dividend reinvestment compounding effects. Consider spreading your investments across various sectors and asset classes as you construct your portfolio. By doing this, you may lessen risk and make sure that you aren't unduly exposed to any one sector of business. Finally, keep in mind that stock market trading is always risky, and that past success is no guarantee of future outcomes. You can raise your chances of accumulating money and accomplishing your financial objectives by adopting a disciplined strategy and remaining long-term oriented. Bonus steps: selling stock. Before purchasing a stock, it's frequently a good idea to establish an exit strategy. When the stock is up 20% or down 10%, for instance, you can opt to review your position. Consider whether it's still a wise investment at this stage. By doing this, you are compelled to consider the stock's fair market value and the company's present position. Making the decision on when to sell will be easier if you have an exit strategy in place. It's crucial to avoid falling in love with a stock since industries shift and firms can fail. A novice's experience purchasing stocks may initially seem intimidating, but with the correct tools and resources, it can be a satisfying and profitable endeavor. You can start your path to accumulating wealth and reaching your financial objectives by learning the fundamentals of the stock market, picking a brokerage account, studying and selecting firms to invest in, and building a long-term investing portfolio. Always keep in mind to maintain a patient and disciplined approach, and to keep your investments' long-term success in mind. You may succeed as an investor and safeguard your financial future with hard work, perseverance, and a little luck. Thanks for watching and follow for more.